2018 to 2020, Trump's trade war with China, tariffs on hundreds of billions of Chinese goods, headlines screaming about standing up to Beijing, both parties talking tough about bringing jobs back home, the entire political establishment united in saying, we're finally going to fight back against China. And in those exact same years, BlackRock, JP Morgan, Goldman Sachs, and the rest of Wall Street quietly moved $1.4 trillion into Chinese markets. Not $105 billion, $1.4 trillion. With the peak year 2020, the absolute height of the trade war. Now, you might think this was a mistake. Bad timing. Maybe Wall Street got caught off guard by the politics, right? Wrong. This was the most predictable move in modern financial history. Because there's a pattern that's repeated itself for over 300 years. A pattern so reliable, so mathematically precise that once you see it, the entire story of what's happening to American economic power right now becomes crystal clear. The global financial system isn't accidental. It isn't disorderly. It operates on a repeating four-stage process that has ended every reserve currency in recorded history. Stage 1 begins when financial elites secure exclusive control over money creation, almost always through the formation of a central bank. Stage 2 follows naturally. That control is used to fund government expansion through borrowing. Debt replaces taxation. Everything feels stable. Growth accelerates. Power expands. The empire appears unstoppable. People convince themselves the rules have been rewritten. Stage 3 is where reality intrudes. The system stretches beyond its limits. Debt grows faster than real output. The currency weakens. Confidence erodes. Control slips. Cracks begin to show. Stage 4 is the part most people never see coming. The same institutions and individuals who engineered the system quietly relocate their capital into the next rising power before the breakdown is obvious to the public. Everyone else is left holding money that steadily loses its value. This isn't a theory. We've already watched it happen in Britain, in Germany, in the United States after 1971, and it's happening again right now. Have you ever wondered how empires really rise and fall? It's not always with a bang. Sometimes it's a quiet transfer of money. Look at Britain. In the late 1600s, locked in a war with France, they were broke. The solution? The Bank of England. It didn't just lend the government money, it turned government debt into the nation's money supply. Genius, right? For the bankers, at least. Britain's debt skyrocketed, but this debt fueled the Royal Navy, expanded the empire, and made the pound the world's currency. But then, as British industry declined, where did all that money go? The same financiers who built the empire started quietly moving their capital overseas, funding the rise of a new power, the United States. By the time the pound collapsed as the world's reserve currency, the financial power had already shifted to New York. The capital moved first. History has a funny way of repeating itself, doesn't it? Ever wonder how an entire country's money can become worthless? Let's look at Germany after World War I. Crushed by 132 billion gold marks and war reparations, the Weimar government faced a choice: crippling taxes or printing money. They chose the printing press. The central bank started printing marks like there was no tomorrow to pay workers and fund programs. When French and Belgian troops occupied the industrial Ruhr region, the government paid workers there to strike, with even more freshly printed cash. The result? Insane hyperinflation. By November 1923, one US dollar was worth 4.2 trillion marks. A wheelbarrow of cash couldn't even buy a newspaper. Savings vanished. But here's the twist. It wasn't an accident. Documents later showed the head of the Reichsbank intentionally crashed the currency to wipe out internal war debts and dismantle the middle class. The chaos ended only when American capital, through the Dawes Plan, stepped in to rescue Germany, giving Wall Street massive influence. Sound familiar? Thanks for watching. So now let's apply this to what's happening right now. July 6th, 2018, Trump imposes the first tariffs on Chinese goods, $34 billion worth. The trade war officially begins. America's finally going to stand up to China, rebalance trade, bring manufacturing back. Both parties support it. The establishment is united. But July 6th, 2018 is significant for another reason. It's exactly 1 month after June 1st, 2018, the day MSCI, the company that controls global investment indices, officially started including Chinese A-shares in its emerging markets index. Think about what this means. When MSCI includes a market in its indices, institutional investors who track those indices must put money into that market. Pension funds, sovereign wealth funds, university endowments, insurance companies, trillions of dollars that simply follow the index. China ADS weight in the MSCI Emerging Markets Index went from essentially 0 to 43% by October 2020. During the same period, 2018 through 2020, U.S. portfolio investment in China hit $1.4 trillion. The peak year, 2020, trade war at its hottest. BlackRock KK expanded its Chinese operations throughout this entire period. JP Morgan got approval for a majority-owned securities business in China. Goldman Sachs increased its stake in its Chinese joint venture. These aren't accidents. These are the same institutional structures that operated through Britain, through Germany, through post-war America, and they're executing stage 4 right now. Let's check the boxes. U.S. national debt, $36 trillion. Debt to GDP ratio, 98%. The Federal Reserve AS balance sheet was under $1 trillion in 2008. It exploded to $9 trillion during COVID, still above $7 trillion today. Same mechanism as always. The central bank monetizes government debt. The government spends far beyond what taxes can cover. Currency supply expands way beyond the economy's productive capacity. And the financial institutions that run this process start moving capital to the next power center. Stage 1, Federal Reserve, established 1913, monopoly on money creation. Stage 2, decades of debt monetization, financing wars and programs globally. Stage 3, system overextended, debt at 98% of GDP, currency debasing. Stage 4, financial institutions moving capital to China while Washington performs theater. We're here right now.